In recent months, the long-awaited gold rally that many economists have been predicting has arrived. Gold has been consolidating between $1,800 to $2,000 for the last 4 years. Gold has shot up in the last 2 months from under $2,000 to $2,330. If you see the chart, there was hardly any pullback in this move, suggesting big players are behind this move. One way of investing in gold is to buy gold directly in the form of gold coins or gold bars. But these are very illiquid and difficult to sell. It is also not very tax efficient. One way of investing in gold is to buy gold mining companies. Comparing gold and gold mining charts, we can see that the gold mining companies have significantly underperformed gold. One of the main reasons for this is due to inflationary pressures. The all-in sustaining cost, which is the dollar amount spent to get the gold out, has increased by more than 10%. Gold prices increased about 9%. So even though we may have expected gold mining companies to have increased profits, that was not the case. However, these inflationary pressures are subsiding, and considering that gold prices have rallied about 15%, it may be reasonable to expect higher profits from gold mining companies, especially if gold continues to move higher from these levels. Apart from gold royalty companies, which provide capital to miners for share of their production at lower prices, there are very few gold and silver companies that actually make profit. Today we are going to look at one company which is profitable with low debt and expected to increase production in the next 5 years. Also, they are not pure-play gold, and they mine copper as well and have plans to expand copper production to tap into the green energy revolution. This is one of the favorite stocks at Muffet Investments, and today's video we take a quick look at the company and explore any options ideas for investing in Barrick Gold. Barrick Gold is one of the largest gold and copper mining companies. Although it is a Canadian company, it is also listed in NYSE. Their mining operations span across 4 continents and 18 countries, as you can see on this slide. They have 13 Tier 1 gold mines and 3 big copper mines. Barrick Gold CEO is Mark Bristow, who has been in the gold mining business for many decades and has a reputation for working in unfavorable jurisdictions. Barrick is majority owner of the Nevada Gold Mines, which is the largest gold mine in the world. Let's take a quick look at the Barrick Gold's financial metrics. Current share price is $17.70. Market cap is $31 billion. Dividend yield is 2.7%. Total debt minus $578 million. This is relatively low for a company with a market cap of $31 billion. Gold production has been static for the last 4 years, and they mined 4 million ounces of gold in 2023, and they have given guidance of between 3.9 to 4.2 million ounces in 2024. Majority of the gold produced was from North America at 50%, 37% from Africa, and 13% from South America. Their all-in sustaining cost for gold production has been steadily rising in the last 4 years from $1,093 in 2021 to $1,400 in 2024. Copper production has also been stable around 191,000 tons, and the production estimate for 2024 is between 180 to 210,000 tons. Their all-in sustaining cost for copper production was $2.62 in 2021, and the guidance for 2024 is $3.10 to $3.40, reflecting the inflationary pressures in the mining industry. Barrick Gold's operating cash flow for the year 2023 was $3.7 billion, and the free cash flow was $650 million. This represents a 50% in free cash flow from a year earlier. Operating margins were 12.8%. Barrick Gold planned to increase their gold and silver production from the current 5 million gold equivalent ounces to around 8 million gold equivalent ounces by 2030. Their two main growth projects are the Reko Diq Gold-Copper Project and the Lumwana Super Pit Project in Zambia. The Reko Diq is one of the largest undeveloped gold-copper projects in the world. Once fully function in 2028, they are expected to produce 430 million pounds of copper and 280 kilo ounces of gold. The total capital outlay for the project is $7 billion. The Lumwana mine is in Zambia and already producing copper. But there is planned expansion of the mine will be completed in 2028, which will make it one of the world's largest copper mine. When we analyze the price expectations of Barrick Gold, we need to look at gold and copper prices as their free cash flow will follow the price of gold and copper. We can see from this chart that price of both copper and gold are on the upswing. First, we look at gold price. Gold does not generate income. So the price of gold has an inverse relationship to the yield of the 10-year U.S. government bond yield. Whenever there is expectations that the yield on the 10-year will fall, then the gold prices rallies. We think that this is scenario being played out at the moment. However, we need to be cautious here, as although the 10-year yields have fallen, they have started to rise, in response to the rise in crude oil prices. This means that the Federal Reserve is less likely to cut interest rates to control inflation. So, if we have a crude oil spike which causes inflation to rise, then gold may not do that well. This is why we need to keep a very close eye on the 10-year yields when considering gold. But we at Muffet Investments believe that in the long term, the yields are likely to fall, as the total U.S. government and private debt currently stands at $90 trillion, and many businesses will collapse if the Federal Reserve tries to raise interest rates. Also, the U.S. government will have to pay higher interest rates on their debt, as they are still running big budget deficits. So in the long term, we believe that interest rates will be kept at lower levels than inflation. Gold is also rising because of increased central bank buying of gold. The biggest buyer is Chinese Central Bank, which increased holdings by 225 tons last year. China's gold holdings have steadily increased from 2021 to 2,200 tons. There is also increased demand for gold ETF in China, where record amounts of capital is flooding into Chinese gold ETF. In 2023, average gold price was $1,950. Each $100 increase in gold price will increase the cash flow for the year by $550 million. Provided gold stays at current levels, the cash flow will increase by $2 billion. Copper prices have also risen as seen in the chart. Average prices in 2023 were around $3.80. Each 25 cents increase in copper will increase cash flow by $100 million. But copper is an industrial metal and very sensitive to the economy. The longer the Fed keeps the rates higher to control inflation, the more likely we will have a recession. Remember that we are at the same interest rates level as in 2006, which triggered the subprime mortgage crisis in 2007. Only this time the dollar amounts involved is much higher. Overall, we think that Barrick Gold is a good investment provided gold can stay at current levels. Although Newmont produces more gold than Barrick, they have much higher debt and more risky if gold prices were to fall. Barrick Gold's share price has risen with increasing gold prices from $14.40 to $17.70. If you want to invest, then we wait for the prices to fall from current levels before buying. Average analyst expectation are for share price to rise to $20. Options can provide a way of reducing the risks if used wisely and also increase the income. Barrick Gold currently offers a dividend yield of 2.7%. By selling options, we get premium, which not only increases the total income but also offers some downside protection. Here we present an options strategy which will combine buying Barrick Gold shares and simultaneously sell puts and calls below and above the share price. The strategy: buy 100 shares of Barrick Gold. Sell January 2026 $20 call and collect $2.59. Sell January 2026 $15 put and collect $1.45. Total premium collected would be $4.04. IF in 2026. Barrick Gold stock price is above $20. Our shares will be called away. But we have also gained 15% from share price appreciation and also collected the dividends and sold premiums. We can also roll the call to a higher strike price, but we will lose a proportion of share price gains. However, this strategy provides much better downside protection than buying the shares alone. If in 2026, the Barrick Gold stock price is below $15, then we will be obligated to buy more shares at $15, but in reality our real entry price would about $13.50 as we already collected $1.45 for selling the put. The sold $20 call option will expire worthless, and we also get to keep that premium. We hope you liked this video, and we would be grateful if you could like and subscribe. Thank you.